Thank you. Yes, as she mentioned, my name is Jeremy Henderson, Rocky's Business Unit Planning and Budget Supervisor within the Lower 48. And we partnered with Alan and Achille last year to do a proof of concept at simplifying our LRP process on the Anaplan platform. And it definitely was a success. But before we start talking about the summary of the proof of concept, where I'll kind of highlight, what the scope of that project was, the successes that we realized throughout the project, and some of the key learnings that you can kind of take away from that we realized. I'm going to go through a company overview, talk a little bit about ConocoPhillips, and then kind of what really drives our behavior, which are our spirit values, and then more so really focus in on innovation, which is what it's definitely going to take for us on the back end as we look to simplify our LRP process and really transition away from what can be considered a pretty manual and labor-intensive process to something that's more dynamic and fits our business. From there, I'll highlight our LRP planning cycle, or a long-range planning cycle, and more so key in on the pain points throughout that cycle that really add a lot of inefficiencies to the process that we effectively mitigated as we went through the proof of concept on the Anaplan platform. From there, I'll turn it over to Alan, and he'll cover kind of the opportunity case and the overall benefits of Anaplan and how, once applied to a greater vision and cycle for the planning process, is where you kind of get more of the value than just what we realized just within our proof of concept. So a little bit about ConocoPhillips. We're headquartered in Houston, Texas, and we are the world's largest independent E&P company based off of production and proved reserves. We have operations and activities across 17 countries that are segmented out into those operational segments that you see down there at the bottom of the screen, between Alaska, Lower 48, Canada, Europe and North Africa, Asia Pacific and the Middle East and other international. And so our Rockies business unit, where we tested the proof of concept, is in the Lower 48 business unit. And so I show this map because every one of these business units that you see on this map is responsible for delivering a strategic plan every year by way of the LRP. And the only thing that is consistent in terms of the way we actually go about the LRP process is the database which we submit the information to. Every asset on this map will actually go about compiling their data inputs in a little different fashion, actually perform and use different Excel models as they roll up their cash flows. And even within Lower 48, that's made up of 3 different business units, our business unit within the Rockies, we have about 8 or 9 assets, and each asset actually goes about doing it in a different way. And so we'll talk about some of the complexities there and the reasons why, and also then obviously further stress the reason why we need to transition to being more standardized in some of our approaches. So to cover our spirit values, again, it's always about what we do, but it's also how we do it. And so again, I wanted to focus in on the innovation piece, which is really key for us. Some of the key themes that I've heard in attending some of the other sessions throughout this week is that everybody is really, on the planning side, basically in Excel hell, essentially. We're just always cranking out different models within Excel. And for ConocoPhillips, we focus a lot on technology at the wellhead because obviously as we're building up that capital budget, that's getting dispersed down to the well level that drives the returns. And so we've gotten very good at nurturing a vibrant innovation culture on the front end at the wellhead in our unconventional place, to where from a completion standpoint, as an example, we're doing a lot there in the technology space and kind of running data analytics at that area. But on the back end process, like transactional accounting or long range planning, we are well behind the curve. And it's definitely going to take us being innovative to test some of these technologies, rapidly adopt them, and get on that platform so we can start removing a lot of the inefficiencies that are inherent within our current process. So to talk about some of the specifics of our proof of concept, so our original scope was to create essentially 2 LRP drill program models. And so our approach there was, again, we in-house, we have this big modeling excellence methodology that all of our economist planners in the asset finance space are required to get trained up on. But when they go away and are sitting in their own assets, they effectively build their own Excel models, and the only thing that's required is to push it through to our corporate reporting database. And so in-house, we had a lot of skepticism on whether or not there was going to be a tool that could actually do a one-for-one calculation with the way we like to look at our financials, our economics, and our operational results. And so our approach there was to take one base complex model and put it onto the platform. And then once it's on the platform and we've tied out, be able to run sensitivities against key drivers to be able to quickly see what the impacts of those adjustments are. And so we were able to successfully do that throughout our project. Show a roll-up of information at a BU level. In our industry, we are an exploration and production company. And so based off of the phase of maturity that your asset is at, there might be very good reason why you might decide to model something at a more detailed level. But when that asset then moves from exploration to production, it might find its way in a different structure within your hierarchy. So we wanted to be able to say, can we quickly drag and drop after we've modeled an asset and put it into a different business unit to see what that does in terms of scalability? And we were able to successfully achieve that as well. Configure and test the dashboard capabilities. That was big for us. Right now the process that we follow is effectively sitting down with our management teams, walking through this 20 or 30 slide deck, and being able to basically show everything that we've been rolling up from a capital perspective, an OpEx perspective, from a reserves perspective. But we want to be able to make those sessions more dynamic because, as you can imagine, obviously working in Excel, and what I'll cover on the next few slides where we kind of highlight more specifically the cycle of the process, anytime one item needs to change, it has to find its way back through all of these other Excel models and back into these other software programs. And so we wanted to be able to make that dashboard more dynamic to where we can test those things out actually in our management review sessions, and we were able to successfully achieve that as well. The import and export capabilities. So, within our proof of concept, again, we were more so focused in on just the Rockies business unit. But we also understand that whatever we do, we have to be able to meet the corporate guidelines, and they're still using that corporate reporting database. And so we still needed to make sure we could push data into Hyperion or Essbase, but we also wanted to make sure that we could draw data from some of these outside data sources that may not even really be in Excel, but find their way into our Anaplan platform that we would then do modeling against. And so we were able to knock that one out actually pretty quickly and easy. So we had a lot of confidence that, whatever we decide to move forward with, we'll be able to at least meet the corporate guidelines because we were doing this in more of in a business unit approach. Perform application security and define user roles, that was obviously easy. And so, as you look at the original timeline there, we originally set out to do this in 2 months. And so we got off to a little bit of a late start and was actually able to achieve all of those scope items in just 5 weeks, which was actually pretty phenomenal and a little bit surprising to us because, originally, as we were trying to evaluate the different approaches that we might want to take, we were thinking that let's just go and build one big Excel model that captures all these elements. And in-house, we were thinking that was going to probably take us about 6 months in order to capture all the individual components of the process. And we were able to do this on the Anaplan platform with the Achille in 5 weeks, which was pretty phenomenal. And so the financial DD&A piece. So because we were constantly beating our timelines that we had set internally, some of the folks on our governance team that, and rightfully so, were a bit skeptical. They added items to our scope, right? You're beating the timeline. Let's see if you can do this next.
We never have clients increase scope like that. It's unheard of.
Yeah, and at ConocoPhillips, we definitely like to test the limits. And so we were able to effectively pull in that new scope item and still beat our timeline of 2 months by being able to get this done in 5 weeks. And so some of the key learnings that we were able to take away from this was our governance team had to be fully committed in order to really make a transformational change. A lot of the folks on our team, on our steering committee as part of that governance team, had been a part of the LRP process for some time. And over time, as our business changes due to certain environmentals, as prices were kind of going up and down, we would not only submit just, say, one LRP. There would be times throughout the course of the year where we might submit 2 or 3, and then with each submission, we might then also submit multiple cases and scenarios at each submission. And so we knew what those pain points are as you have to deliver so many plans throughout the course of the planning period. And so we decided to appropriately staff this project with subject matter experts that had similar experience and knew their models, their Excel models in and out. So we had Power Excel model users. And we also had folks that had the experience of the business as well to be able to really dedicate their time and deliver success on this project, which was very key. But as we were walking through the process and in the fact-finding session, we obviously knew that our models were inconsistent. And because of that inconsistency, we realized that we really have to come up with a way, even just within our business unit of Lower 48, to more so standardize this process. And so the way we went about the project, with Achille, was being able to have our user requirement sessions up front. And so I know this map actually starts in 2017, but when I myself was an analyst about 2 years ago, and I was sitting in my office at about 11:30 midnight, just trying to upload data into a database, I went to AFP and they had an advertisement for Anaplan, and I'm watching this and I'm looking around like, why am I using these tools right now? They are so inefficient. I need that. And so I reached out to the Anaplan folks, and Brian and Andy from Anaplan came in to do a demo, and I was just impressed with their level of knowledge on our industry. Obviously, there's a good number of people here across different industries, and so for them to come in cold and have a good understanding of what we were looking to accomplish off of the first meeting, that was impressive. When we sat down with the Achille folks during our user requirement session, which was 3 days, I believe, throughout those 3 days, as quickly as they were being able to brought up to speed and the industry knowledge that they brought with them as well, we kind of knew at that point that this was going to be a success, because in the oil and gas industry, we kind of speak a little bit different language. Our acronyms are a little bit different. I see here folks kind of refer to FP&A, we call it F&PA. So little small things like that kind of had to get us over the hurdle, but we were able to get over that hurdle quickly. And what was also impressive was the fact that it took one model builder 5 weeks to take our most complex model that we had in our business unit and put it onto the Anaplan platform. And for us, that was just amazing, because we were thinking we were going to pull about 2 or 3 people off, go and work this project to try to get something into Excel, and think it was going to take six months. So for them to deliver in this short time window with one model builder was impressive. So if we talk about the flow of the LRP cycle, so I wanted to show you this just to give you an idea of when a change gets made, how it basically has to filter its way all the way back down to the bare bones and the building blocks of the process, and then ultimately find its way back up. So to define the cycle a little bit, so obviously our executive leadership teams, they're the ones who set the strategy for the near and long term, and communicate that strategy to our corporate strategy team that effectively sets milestones, sets timelines, works with the chief economist's office to get prices and inflation rates, and then they'll issue that guidance down to our regional headquarters level. At that point, they're getting a little bit more specific on which assets are going to be responsible for executing a certain capital budget. But from there, we do then start to build the bottoms-up process, starting with the operations team and the back and forth communication that happens there with the asset finance team before it gets rolled up to us at the BU finance and management level. And so the focus of our proof of concept are in those red boxes there. And so, of course, anytime, as I mentioned before, a revision is necessary, it has to work its way all the way back down through this cycle, which you can see is supported by a number of Excel models, scheduling tools, Spotfire, so it's a pretty clunky process that, in order to make sure that obviously the numbers and data is correct, we build in a lot of QA/QC components, and that's why we're spending all of our time in the office and over the weekends just trying to make sure that the data is correct. And so it's obviously very, very manual intensive process. And so this system is just not scalable. And that's one of the things that we realize as well, is that if we continue down this path, knowing that we have a focus on innovation, this is not innovation. This is effectively sticking with the status quo, and we need to get better in this space. And so we were dedicated to do that. So diving just a little bit deeper into those red boxes that I showed on the previous slide, and highlighting where our proof of concept basically resided, was where you see that LRP gray box. So we do have one model that effectively just pushes data into the corporate reporting database, but there's all these supplemental models that then feed that, which you can see to the left side of that LRP model flow box there. And so our focus was, if you'd imagine this iterative process, right? So you start with your LRP model, push it into a database, draw that data down now into your DD&A, your depreciation model, push that back up to a database, then drag and pull that information back down into what we call our metrics template, which is where we get all of our economic measures of merit. We then draw that data down into another Excel model, a variance template, and then another one of our capital flexibility template. And so this is, like I mentioned before, is just not sustainable. So we decided within our FP&A groups was to focus our efforts on this proof of concept, in that particular section of the flowchart. But kind of as I've been listening and attending to some of these other sessions where folks are effectively saying, just get started, right? Get started and then build your use cases from there as a way of implementing the overall platform. And so the successes that we realized here in this particular section of the flow, as we started socializing the results, the successful results of our proof of concept, we're then starting to see those folks in that red part of the box across the different other functions saying, can we get on? They've recognized the fact that just within a proof of concept, we've removed a lot of time, from the system that we're able to give back to our analysts to be able to actually run their analysis and make sure that the plan is as intended. And so that feedback actually is really good because right now, of course, we're just integrating that data as part of our proof of concept versus actually getting them on the platform to do their modeling there. And so the feedback that we've gotten is they're wanting to get started on this, right away, but obviously we need to get started on it as well. And so our proof of concept has come a long way in terms of where we started and kind of that small window of finance, trying to find a finance solution, and then obviously branching that out to the other functions who can also obviously realize the same benefits that we saw as well. So with that, I'll turn it over to Alan, and Alan will kind of cover the opportunity case, benefits of Anaplan, and then how it could be applied to the overall strategy.
Great. Thanks, Jeremy. So as Jeremy's talked through this, he shared with you the overall process and some of the challenges in that. I think you could all look at that at the level he's given it to you, even at a relatively high level, you can still tell it's very complex. I mean, they're a large organization. They're a very detailed organization. And there's a lot of moving parts in that whole process. But he did touch a lot on kind of what that looks like today. And so Jeremy had actually put together this diagram, and we decided when we were putting this together to use it. Really just kind of at a really high level, it's showing you the number of systems they're going to, where they're pulling data from, and some of the key tools involved. And really you can obviously tell the Excel icon got worn out putting this deck together. Jeremy and I were talking when we were putting this together, and he made a comment to me, and he said, I look at this and I can't believe this is kind of what we do. Yeah. And I've been doing EPM work for over 10 years, and my response was, you look like everybody else out there and how they work. And I'm seeing heads nod. Everybody lives in this world. It's from Fortune 5 companies we've been into down to a $20 million firm. It looks like this. So there's obviously just a significant challenge in that basic problem of how the data gets managed, pulling it out of systems, putting Excel, emailing it to people. I think most of you are probably very familiar with the pain that's part of this. And so part of what ConocoPhillips is seeing out of what the opportunity was really just dealing with the mechanics of this process and consolidating this. But they are much more visionary than that, to be honest with you. They look at it and realize that beyond just getting the data consolidated, getting people out of the business of having to get the data into the system and the value of that they've got a lot of other potential benefits. And so the bottom left, you can look at some of the stuff that they documented on that. The ability to do scenario planning. That was something that's just too painful to do in the process today. In most companies that we work with, if they do that, they tend to maybe run one case. Past that, it's just you never have time. And you just simply can't support the effort to do that. And that was something they definitely wanted to prove. They were looking for the ability to respond to changes in their underlying assumptions and sensitivities. That's very common in the industry, and everybody deals with this. But everybody knows that everybody tracks the price of oil now. I think it seems to me everybody wants to know what oil and gas prices are, and it can be very volatile, as we know. And when they're in that world and they're looking at it, trying to adapt quickly to something like that and planning, that's a big deal. So you need to be able to be flexible with that. Obviously, they want something more real time. They go through a process today in this model, as you can imagine, where you simply can't consolidate all the results until the end of the process. They don't really have insight into the total picture until they get to the end. That's true. Of that, right?
Yeah, nor do we have the transparency, to be honest, as well. As I was highlighting on some of the other previous slides, data is just coming to our finance teams as hard-coded numbers, essentially. We don't really know how that data basically transitioned from an individual well cost to an aggregated view, right?
Right.
We just get a hard-coded number. And so, the transparency was something that was key too, which was a big point as we were socializing to the other functions. You can see basically the way that we're rolling up the information, and we can see, the detailed inputs that we can provide better insight.
Yeah. So these were some of the things. This was basically the fundamental problem and where the opportunity was and what they were trying to achieve in the POC that we worked on with them. And so I'll take that to the next piece and just at a really high level kind of walk you through what we've done in the POC and then talk about their vision as well for where they're going. So if you look at the bottom left, there's another piece that's unique in this and that Jeremy touched on. Again, their businesses in these different areas they operate in are at very different levels of maturity, basically. Mm-hmm. And because of that, they have differences in how they need to model that. And you often run into deals where people tell you, well, we do it different over here versus these guys. And when you really get into it and understand, that's just because somebody over here wants to do it differently. There are differences in this, right? And so that needs to be supported. And that's a little bit of a challenge. They have an interesting scenario in upstream oil and gas where there are a lot of tools that the operational people are using to do planning. Mm-hmm. The engineers are in these systems every day looking at, we're going to drill a well here. We need facilities that go there to when that well goes on to production, and we can move product and mm-hmm. And all the stuff that's related to that, where they're doing the planning for all of those things. And so part of what we did in this was, how could we take that data, which is very valuable operational data that has financial impact, basically mm-hmm. can drive that plan, and bring this into the process. But then also take where you've got a different business unit that's got a very different need or a different area within the business unit, where the planners, which is next to that scheduling tool down there, they're working off of a very different way to build it, where they've got models that basically say we have different types of wells, and we know we're going to have a pace of drilling those wells, and based on that, I can start figuring out what my capital costs are. Mm-hmm. I can start figuring out when this well is going to start producing, how much it's going to produce. The wells start to decline how they produce over time, so that it changes pretty dramatically, and so you can model out what that looks like. And so we built a complex model with them where they could define those characteristics within a particular area that said, here's a type of well that exists in Niobrara. Mm-hmm. And our planners can then go in and say, month by month, here's how many of those wells we're going to add to our portfolio, and therefore start driving out all the costs and revenue and everything else associated with that, basically. And so we kind of had two different ways to get that, mm-hmm. But we brought all that together to create that consolidated view of Rockies.
Yeah, and we gave that optionality, and it came with a lot of flexibility as well. Because of my view on it is, if you take the most complex approach, who cares if another asset may only be using 20% of that model, right? It's a standardized approach that's going to gather, the inputs in the same way, do the modeling in a consistent manner. And so if you have another asset that's using 80% of it, that's fine, because we're still all following the same standardized approach and being able to give time back to the system versus having to build in these multiple QA/QC checkpoints just because somebody wanted to go off and do it their own way.
Yep. So as we went through that process, we put that together. There's obviously significant output that they need for this long-range planning process, and so you can see some of that on the right-hand side. And what they're getting out of this first piece is that view for that particular business unit, and that is feeding into that corporate LRP database mm-hmm. that Jeremy had mentioned. I think Jeremy would echo, and he said this a little bit already, but they clearly saw a decrease in the FTE effort required to run this process with the POC. The cycle times were significantly reduced. We didn't do any time studies on anything like that. I don't know if you guys have looked at it since then, but I think it was just like so apparent. It was like, no doubt.
You inherently know, especially when you're talking about making these sessions with your management team more dynamic. You inherently know that you're going to remove a lot of time out of that system. And so, one of the things that we really tested the platform on, and I've heard around here, is that depending on the industry, you might look at a long-range plan for 3 to 5 years. Well, in our industry, point forward, a well can last for 30 years, and based off your acreage position, you might decide to drill thousands and thousands of wells, over 60 accounts ultimately to get to cash flow. And so we actually thought we were going to break Anaplan with all of the thousands of wells.
I think we tried to break Anaplan.
We did. And, honestly, the feedback that we got from our management team, understanding that right now, within our current state, any question that get asked, you just automatically know. If you're wanting to understand, economic implications, there's going to be about a 2 or 3 day waiting period so that it can cycle its way back down. When we tested this out with our senior leadership teams within lower 48 and kind of did like a quick little walkthrough and said, what is it that you would like to change? So that's prices as an example, because we know that that's something that has to happen. And it filters its way back down through all, however many thousands of wells that we modeled out within Niobrara, and it just instantly spit out an answer. And so that was significant.
Yeah. And then at the top, obviously, you're dealing with the sensitivities would be things like pricing. So they may give you some long-range assumptions around that. And again, they change all the time. It's inevitable that you're in that process and something's going to change. And they were able to kind of really see what that would look like for them. So this was kind of step one. We've done the POC. The next step for them is to really productionize, if you will, this piece is where they are. But I will give ConocoPhillips a lot of credit and Jeremy a lot of credit. I don't recall ever asking him when he heard the term connected planning, if it was during the project or before, but without a doubt, he's captured the vision at this point. And so as we've talked about that and where this goes, it's already a vision is being created to go well beyond this. And so as we look further down the road, part of that is obviously just the expansion into other parts of the company. We started talking to them about lower 48 initially, where they have a good part of their operations. But as Jeremy mentioned, they operate in Canada, they're in EMEA, they've got assets in Australia. So they're in 17 countries operating globally, and one thing they did, and this is really interesting, I would definitely, for you guys that are selling your vision and your journey on Anaplan, you should talk to him and what he's done. He basically became a salesman, and he created a deck that outlined what they've done and started crafting that vision, and he basically did an internal roadshow and started selling the management team on this, and very successfully in doing that, to where now they're looking at it and saying, well, it's beyond just the LRP, there's other stuff that's part of this as well, and it is really that connected planning journey. So if you look at some of this stuff that they've already had conversations, and it's much broader than what we're depicting here, but if you look at that strategy team at the top as an example, debt and debt components in a company like this with a massive capital investment, that's a significant deal. I mean, you're making large investments up front with, obviously nice substantial payoffs long term, but there's a balancing of cash flow and debt that's a big part of what you have to do. Long term, I think there's a vision there that you do that modeling in here as well, because it's completely integrated, right? And so the treasury groups and the strategy groups could be looking at that and leveraging that in their modeling as well.
Same with workforce planning.
Yeah, workforce planning, something we were talking about yesterday. Supply chain, another component. I mean, obviously there's a component to get all the materials you need there at the wells and to operate them and to drill them. And so there's a component there that could be integrated with this. And obviously at the very high levels, giving the management team some really high level modeling that's even higher than this long-range planning, that's going to flow into what the CapEx assumptions need to be and where we need to keep our parameters on that feed in that modeling and so on. And so they really crafted a vision of what that would look like to bring that together. And I think in the long-term benefits, if you look at top right on this, the thing that you add beyond the efficiencies that they're kind of seeing already is you start getting into that. How do we start looking at different markets? I skipped one actually at the top too, the divestitures. M&A activity is a huge thing within this industry. There's everybody's always has, they're realigning their portfolio all the time and when working with each other in the industry to do that and balance it for each of them. And so how do you deal with that? How do you deal with making decisions about markets and being able to adjust very quickly and dynamically and understand what that's going to do to you? And that would become part of this model as well. So clearly building a foundation to expand just into the other areas of business, but also building a foundation to start connecting other components that are really peripheral parts of this that are connected and integrated to this as well, right? And so they're preparing as they look at this to moving forward and already getting a vision of where that's going to go for them. So I think you've heard Jeremy talk about this a little bit already, but without a doubt, some of the things that Anaplan talks about and the benefits, the time savings is clearly there. The scalability piece, I don't think he said this a minute ago, but how many of you have a long-range planning cycle that's longer than 10 years? Wow. Okay. They plan for 50 years. So top that. So obviously scalability is a big issue. You've got to deal with a lot. There's a lot of information, and they look at it over a long period of time because of the significant investments that are made. You just don't go into a new country and ramp up projects, you know, in even a few years. Sometimes there's much longer horizons for that. So they again very much have a stronger ability to adapt to change, to manage change, quickly adapt. I think they see the vision of truly being able to eliminate the spreadsheets at this point and get that all centralized, get more standardized processes, create a collaborative environment, and all the benefits that comes out of that type of a solution. Okay? So that's it. Open to questions. Jeremy, you have anything else that you would add?
No, the only thing that I would add is, you know, along our journey, it has taken some time. You know, a company our size, you know, we are in that evaluation phase. But, you know, Anaplan has really set the bar really high for us and basically forced us to really, you know, question ourselves, are we really being innovative? You know, we talk the talk, but let's make sure that we walk the walk now. And so being able to actually see a platform this powerful and how we can flex our existing processes to fit on that has really challenged us, you know, to make sure that we are applying innovation, not just at that wellhead level, but at that back office, in that back office space as well.
Okay, any questions? You get the microphone box.
Hi, I was wondering if your annual planning was connected to your long-range plan. So like, we have, you know, more detail on the annual plan and how you kind of connect that with a way longer vision for the
sure. So within our cycle, you know, we actually start the long-range planning process in March. So, and then towards the tail end of the year in October, that's when we kind of set, you know, our in-year forecast and then try to set the next 12-month forecast. But we do have interim forecasts between first submission and final submission, and those oftentimes are not connected. And the reason why they're not connected is because they're managed in two totally separate models. So as we were going through this proof of concept, and we basically realized that we're able to condense the amount of you know, deficiency or support that's required for all the multiple models that we've got, we found that we'll be able to bolt in our current in-year outlook model into our long-range planning model, have that data be integrated, and so every time you update one of your outlooks, you're now essentially updating your LRP as well. And so that was one of the benefits that kind of came out of looking at you know, the integration power of Anaplan that forced us to then look at other ancillary processes that the LRP supports.
So my question is around the new technology that Anaplan announced today, the optimizer, and how you plan, or if you were thinking about trying to integrate that into your long-range plan for various scenarios, finding your optimal solutions. When I heard about that this morning, I nearly flipped out because I want to implement a long-range plan for our organization as well, and that seems like an amazing tool.
I did the same thing. When I heard it this morning and I saw the optimizer, I flipped out as well. And not just on our LRP process, but on our you know, basically to allow it to help us with our tactful execution of our current plan. Because just as an example, you know, it's similar to the example that they showed where they had a disruption in their supply. Same with us. You know, if we end up having some type of downtime, you know, for maybe a gas plant flyer or who knows, you have that downtime, then your optimizer effectively says, well, which wells might I be able to kind of crank up in order to meet that lost production? And so, yeah, we haven't thought about that as part of our proof of concept. But throughout this session that we've been attending this entire week, the optimizer came up just for, you know, tactful execution and how that then would feed into your long-range plan. There was another session that was held where they kind of looked at Anaplan as being a project management tool. So, you know, now as part of our process, we will issue a calendar, set hard deadlines. There's no way to kind of measure against that up until that point until the deadline either is or isn't met. Looking at the project management piece, we now think that we can probably apply that just to our closing calendar. You know, here are the type of activities that we want to do, and this isn't even planning. This is just actual, you know, month-end close type activities. So looking at, you know, just the platform in itself, and that's kind of why from a connected planning or data integration approach on how you really are going to transform the kind of way you go about doing your business, looking at that project management piece, that can significantly transition the way we actually do our month-end close process right now to something that is more dynamic.
Any other questions? Okay.
I do.
Thank you
All
very
right,
much.
Thanks for having us.